Hello everyone and welcome back to the Daily Crypto Market Podcast. It is Thursday, July 10, 2025, and what a day to be watching these charts. I'm Murph, and as always, I'm joined by my partner in crime, the man who lives and breathes the order books, Cooper.
Great to be here, Murph. And you're right, it's one of those days where you don't want to look away for too long. The market is coiled like a spring.
Coiled is the perfect word for it. It feels like the entire market is holding its breath. Before we dive into why, let's get the formalities out of the way for everyone listening.
Absolutely. A quick reminder to everyone that this podcast is for informational and entertainment purposes only. Nothing we say should be considered financial advice. You have to do your own research and make decisions based on your own personal situation. The crypto market is incredibly volatile, so please be careful out there.
Perfectly said. Alright, let's get into the meat of it. Cooper, give me the 30,000 foot view. What's the mood? What's the overall sentiment in the market today?
The sentiment is, interestingly enough, bullish. But I have to add a major qualifier here. It's a very cautious, very tense kind of bullish. It's not the euphoric, number go up bullishness we've seen in the past. It's more of a we're on the knife's edge of something big, but it could go either way kind of feeling.
A knife's edge. I like that. It captures attention. Let's put some numbers to that feeling. What are the prices looking like right now?
Of course. As of this recording, Bitcoin is trading at exactly $110,300.
Well, just sitting right on that massive psychological level. What about the big alts? Where's Ether?
Ethereum is at $2,742. Solana is holding strong at $155.70. And XRP is trading at $2.41, or more precisely 2.407.
Okay, so a lot to unpack there. Let's start with the king, Bitcoin. $110,300. It feels like we've been knocking on this door for days. Why can't we seem to just kick it down and move on?
That is the multi-billion-dollar question, isn't it? The technical picture tells a very clear story. Bitcoin is facing immense pressure right around this $110 level. Our data shows that there are enormous sell orders clustered right near Bitcoin's all-time high. Think of it like a giant wall that sellers have built.
So for anyone who's newer to this, when you say sell orders, you mean people have preset instructions on exchanges to sell their Bitcoin if it hits that specific price?
Exactly. Large holders, maybe some miners, maybe traders who bought lower, have all decided that the current all-time high area is a good place to take profit. This creates what we call overhead resistance. Furthermore, we're seeing significant and persistent selling pressure in the spot market.
Okay, break that down for us. Spot market selling versus what? Derivatives. Why is that distinction important?
It's a crucial distinction. Spot market selling means people are selling actual Bitcoin that they hold in their wallets. It's not just paper contracts or futures bets, it's a physical asset, so to speak, being sold for cash or stablecoins. This type of selling has a more direct and heavy impact on the price. It suggests that holders are genuinely cashing out, which makes it much harder for the price to push higher. The bulls have to absorb all of that real selling just to keep the price from falling, let alone push it up.
Got it. So the bulls are trying to run uphill while carrying weights, and the bears are just letting gravity do the work. So if that's the resistance, where is our floor? If this pressure becomes too much, where do we need to hold?
The key support zone we're watching is between $107,500 and $108,000. That range has proven to be a floor for now. If we see Bitcoin break below $108 and fail to reclaim it quickly, that would be a very bearish signal. It would likely invalidate this whole breakout attempt for the time being.
And what would that mean for the altcoins that have been having such a good run lately? I've seen some crazy green candles.
It would be bad news for them, Murph. A lot of these recent altcoin rallies, like what we're seeing in Solana and a few others, are predicated on the idea that Bitcoin is about to break out. Traders are front-running the potential move. If Bitcoin falters and drops below that $108 support, you can expect those altcoin gains to evaporate very, very quickly. They are extremely sensitive to Bitcoin's direction right now.
So it's a house of cards built on a foundation of Bitcoin holding that line. But what about the other side of the coin? What if the bulls win? What if they absorb all that spot selling and we punch to $110 for real?
That's the scenario that has the market cautiously optimistic. If Bitcoin can manage a clean breakout, and by that I mean a strong move above $110, followed by it holding that level as new support, then the game changes completely. Those massive sell walls would be gone, absorbed. Short sellers would be forced to cover their positions, adding fuel to the fire. It could trigger a very strong, very fast rally for Bitcoin itself.
And for the alts?
It would be rocket fuel. The confirmed Bitcoin breakup would give the entire market a green light. Ethereum at $2742 would likely make a run for $3,000 almost immediately. Solana at $155 could challenge its prior highs. The risk and appetite would surge, and we'd see capital flow aggressively into altcoins. This is the exact scenario that would shift our view from this slight bullish bias to an upright, fall through to bullish outlook.
It's amazing how it all hinges on this one specific price zone. Okay, let's zoom out a bit. It's never just about the charts. What's happening in the macro environment that's adding to this drama?
There's quite a bit happening on the macro stage. First, we have former President Trump, who is actively negotiating deals with multiple countries but is also remaining very firm on his stance of implementing tariffs. This creates a baseline of economic uncertainty. Tariffs can impact inflation and global trade, and markets dislike uncertainty.
Right, the tariff talk always spooks the traditional markets. How is that filtering into crypto?
Directly through investor sentiment. When there's macro uncertainty, sometimes big money hesitates to make large, risky bets. They might wait on the sidelines to see how things play out. This could be contributing to the lack of conviction we're seeing in pushing Bitcoin through the final resistance. Everyone is also waiting for today's Fed minutes to be released.
Oh, the Fed minutes. Always a market mover. What are we looking for in that release?
We're looking for any signs of division within the Federal Reserve. Specifically, how different members view the potential inflationary impact of these proposed tariffs. If the Fed seems divided or uncertain, that adds another layer of complexity. If they signal that tariffs could force them to be more hawkish on interest rates, that would generally be a headwind for risk assets like crypto.
And I hear there are a couple of big dates on the calendar next week, too.
Yes, two very important ones. We have the next CPI data release, which is the key inflation metric. Every CPI print has been a major market-moving event for the past couple of years, and this one will be no different. A lower than expected number would be extremely bullish. On top of that, it's also Crypto Week.
Crypto Week? It sounds like a party. What does that actually mean?
It's a period where we're expecting a concentration of positive, crypto-specific news and events. It could be project announcements, partnership reveals, conference keynotes, basically a wave of good news for the industry. This is one of the main reasons why, despite the technical pressure and macro uncertainty, sentiment has managed to stay cautiously bullish. The market is anticipating that this wave of good news could provide the final push Bitcoin needs.
It's a fascinating setup. We have this huge technical battle at $110 for Bitcoin, while the macro world is a mixed bag of tariff threats and potential inflation news. And then you have this industry-specific catalyst in Crypto Week waiting in the wings. It really is a tug of war.
That's the perfect way to describe it. And you see that reflected in the altcoins. Look at XRP trading at $2. 407. It had moments of sharp upside, likely driven by speculation or rotations, but it's still fundamentally tied to what Bitcoin does next. Same for Solana at $155. 70. It has outperformed many others recently, showing strong relative strength, but if Bitcoin rolls over, Solana will feel it just as much as everything else.
So for our listeners, what's the strategy? You said we are flat with a slight bullish bias. Can you explain what that means in practice?
It means we are not taking on large, aggressive positions right now. We're in observation mode. The slight bullish bias means we acknowledge the potential for an explosive move to the upside is very real, given the upcoming catalysts and the prolonged consolidation under resistance. So we might have some smaller long positions, but with very tight stop losses placed just below the key $108 support level.
So protecting the downside is paramount.
Absolutely. The risk of a sharp rejection here is significant. Being flat, or mostly in cash, means we have the capital ready to deploy if we get the confirmation we're looking for. Our stance turns out right, aggressively bullish only if BTC breaks and, critically, asterisk sustains asterisk a move above $110. Until that happens, patience is the name of the game.
Patience is the hardest virtue in crypto, but often the most profitable. So, to summarize for everyone, Bitcoin is in a decisive battle at $110,300. The line in the sand for support is $108. A break above could unleash a massive rally across the board, led by alts like Ethereum and Solana. A break below could see recent altcoin gains get wiped out. And all of this is happening against a backdrop of macro tension with Trump's tariffs and the Fed, but with a potential boost from next week's Crypto Week.
You've nailed it, Murph. That's the entire picture in a nutshell. The next 24 to 48 hours will be critical as we see how the price reacts to the Fed minutes and whether the bulls can finally gather the strength to break the wall.
Fantastic analysis, Cooper. It's a complex situation, but you've made it crystal clear. That's all the time we have for today, folks. Thank you for tuning in. We'll be back tomorrow to see if his gold spring has finally snapped.
Stay safe out there, everyone. Talk to you tomorrow.